I still remember people were getting 15% interest rate on fixed deposit.
No, but rate of interest doesn't mean anything. There are tragic cases where you save your whole lifetime and you realize the money is not going to last you 6 months post-retirement.
What would be the questions that you would ask to analyze my business?
Number one, I want to make sure you understand your cost of which, trust me, you bring 100 businessmen right now, 98 would not know.
So you're saying taking leverage is important to grow faster.
If somebody starting a 100 crore company and you have 100 crores, my suggestion is start a 300 crore company. If against your 100 you can borrow 200 more and start a bigger business. It's a very fashionable statement to say a business is run for all the stakeholders. And I say that's nonsense. Business is run for one stakeholder and that is the owner. So I have two golden rules. I don't know why I started this.
No, this is very interesting. Please continue.
Hey guys, welcome back to another episode of the 1% Club Show. On today's episode, I have Dr. Anil Lamba. Dr. Anil Lamba is the author of one of the most popular books of India, Romancing the Balance Sheet. Today, he has come here with the launch of his new book, Start Early, Finish Rich. So Dr. Anil, thank you so much for being on the show.
Thank you, Sharan. Thank you. Pleasure being here.
So I just wanted to ask you, how do you know so much about finance, right? You've been doing this for decades and decades. You know things which are not in textbooks, right? I can't find these in any other courses. So you talk about things which seemingly nobody knows. And some of the largest companies of India hire you to solve their problems. You know, companies like L&T, companies like ICICI, Ultra Tech, they hire you to solve their financial problems. So how exactly do you know all of these things?
I don't know how to answer that question. I'm sure many others know. I'm not the only one. Neither have I invented the subject. But what I do understand is, different people may read the same book, but your interpretations may vary. So I think my interpretations are what different from somebody else's probably. That's where the difference comes in. But financial principles are age old. And I think all the credit for the knowledge has to go to the course called Chartered Accountancy.
Yeah.
It's such a wonderful course. So everything I teach I learned from there.
So I still remember when I just started my own business, 3 months into it, I picked up your book, Romancing the Balance Sheet. I read it cover to cover. And then I came across a video of yours which said that 9 out of 10 businesses fail because of financial mismanagement.
Undisputed fact. At the cost of offending my own finance community brethren, I say the least finance management happens in the finance department. So by the time the finance professionals come into the picture, the good or the damage is already done. And you know what? That's an avoidable reason of sickness.
Right.
I mean, if a company shuts down because the product is faulty, they deserve to shut down. If they shut down because they didn't understand how important it is to sell, not only to make but to sell, they deserve to shut down. But when everything is fine, and you shut down due to financial mismanagement. And why did that happen? Because you didn't realize it is everybody's responsibility.
I was watching one of your videos and you said that the companies that you would invest in, right, are companies which have low operating leverage and high financial leverage. These are the companies that you love. That's what you mentioned in one of the videos. I don't know if I said it correctly.
Number one, people have a wrong impression about leverages. They treat it as if leverage is a bad word. People who don't have leverage get up and proudly sometimes say, I'm debt-free. I don't understand what is there to be proud about. Either you're saying I'm debt-free because now I'm not growing anymore. I don't have debt. I love it. But I don't want to buy your shares if you're not growing anymore.
Correct.
And if you are growing and when you say I'm debt-free, you're saying I will not use debt. I will use equity. Equity is probably 3 times more expensive than debt. So I have 2 golden rules.
Okay.
I feel if you don't violate those rules, the more debt you take, the better you'll be.
Interesting.
So problem is not with debt. Problem is with taking debt and not being able to deploy it in such a way that you earn more than the cost of debt.
Okay.
Or not being able to deploy in such a way that the money where you deploy will bring it back before the debt has to be paid back.
Okay.
If these 2 rules don't get violated, debt is fantastic.
So you're saying taking leverage is important to grow faster?
Yes. But then sometimes people misinterpret. I'm saying you want a 100 crore project, you got 100 crores in the cupboard, don't take debt. Not at all. First put your money. But if somebody starting a 100 crore company and you have 100 crores, My suggestion is start a 300 crore company. If against your 100, you can borrow 200 more. First put yours. Sometimes people give the right answer for the wrong reasons. They say, yes, I should take debt. Why? He said, things might go wrong. I may lose the money. I said, damn it, if there are chances of you losing the money, all the more reason to put yours. You have no moral right to risk somebody else's money. So first put your money. It is a sign of your sincerity, your confidence in your business. So for various reasons, you got to put. But against your money, if it allows you to borrow, let's say in the ratio of 1:1 or 2:1, then take the debt also and start a bigger business.
So then let's evaluate businesses here for a second. Primarily, there are two types of businesses. One is a product business, other one is a service business, right? In a product business, let's say I'm a manufacturing company, then obviously I can take debt, build a very big manufacturing plant, take larger purchase orders, be okay with, longer waiting periods for receiving my money because I have debt. But if it's a service business where I'm offering a service of human labor or whatever it is.
First question is, do you need money to grow your business is what? We are not saying take debt because you're manufacturing or anything. A manufacturing company, if it has opportunity and to exploit that opportunity, you need money. Now the question is, where should the money come from? Equity or debt? I'm saying debt is cheaper option.
Correct.
In a service company, suppose the money is not required. Then you neither need equity nor you need debt.
Correct.
Question is only when you need money, what should we use? So what is the relative advantage and disadvantage of each? If I give you a textbook answer, 3 factors have to be taken into account.
Okay.
Number 1, the cost factor. Number 2, the control factor. And number 3, the risk factor. From a cost perspective, the cheapest is debt.
Okay.
From a control perspective, debt is still better. Why? Because if you want to double your investment, you put 100. Now you want to become twice the size. You take 100 from somebody else. From being a 100% equity holder, you become 50%. You lost control. But if you take any amount of debt, you're still a 100% owner.
Cool. Control is there.
So from a cost factor, debt is better. From a control factor, debt is better. So from a risk factor, equity is better. Because debt comes with a obligation to return. So there's a risk involved.
So now, Dr. Anil, let's say I'm a business owner and I have been running business for the last 2 or 3 years. Now, if you had to consult me, what would be the questions that you would ask me to analyze my business to tell if it's good or bad, if I'm doing a good job or a bad job?
There are many, but I'll bring them down to 1 or 2. Number 1, I want to make sure you understand your cost of capital. Which, trust me, you bring 100 businessmen right now, if not all, 98 would not know. Forget knowing cost of capital, they wouldn't be able to tell you how much is the capital in that business. Then you got to make sure that the revenue that your business generates should not only cover the cost of production if you're a product company, or in your case, cost of making all these things, or the cost of admin, or the cost of selling.
Right.
But it should also cover the cost of capital. The vicious cycle is when you don't even know your cost of capital, you don't even know whether you're earning enough to cover that or not.
Right.
And within the capital, the most expensive is owner's capital. And most owners think their own money is free. So when a business earns profit, so-called, and everybody is getting, but the owner is not getting a desired rate of return, that's not a sustainable situation.
Right.
I was writing in one of those Sunday musings that it's a very fashionable statement to say a business is run for and on behalf of all the stakeholders. Who are the stakeholders? The owners, the employees, the vendors, the bankers. And I say that's nonsense. Business is run for one stakeholder, and that is the owner. All the other stakeholders are facilitators in the process of ensuring that the owner makes money. Because when the facilitators try to fleece you, vendors try and take as much from you, employees try and take as much from you. And if only they make money and the owner doesn't, guys, it's a matter of time before the owner will say, there's no point continuing, and then nobody will make money.
Right.
The facilitators have to understand, do everything in your power to see that the owner earns. And earns how much? That high cost of capital that I told you.
Right.
That is a sustainable proposition.
No, I get the point, because let's say I have 10 crores and I'm working day and night on my business. Now, if the profit that I'm making from that 10 crore is just, let's say, 1 crore, I'm like, why am I doing this business? Right? I might as well put this
Or
in the
if
stock
everybody working with you is earning, you're doing so well, Employees are getting handsome salary. Landlord is getting rent. Vendors are getting paid. Bankers are getting paid. But Mr. Sharan is earning 5, 6, 7%. You will say, damn it, did I start this business so that I can generate employment in the country?
Right.
Did I start the business so these guys can make money, or should I be making money? If you are not making and everybody is making, sooner or later you'll say, let's shut it down.
Yeah.
And nobody will make money.
Correct.
So doesn't it make sense for everybody to make sure that you make? In their own interest, not out of the goodness of the heart.
Right.
So that they continue making, they got to make sure you have to earn. But for that, you got to attribute the right cost to your capital. If you yourself think my money is free, then the tragic thing that happens is this business will still continue. Everybody around you will make money except you. I think whichever way you look at it, unless a business can earn for the owner 30, 40, 50%, it is not worth running. But this again will raise a lot of questions. I'm not talking about profit margin. When I say business should earn 40, 50%, then people misinterpret which business gives you that kind of return, because they are misinterpreting this to be a profit margin. I'm talking about ROI.
Can you explain?
I was a director in an IT peripheral company, very large. A few thousand crore turnover, ridiculously thin margin. Business model was, when the goods will land on the shores of India, they get released from customs. They are loaded onto hundreds of delivery vans, sent all over the country, and money collected should happen in 7 days. If it took 8 days, this company made a loss. That thinner margin.
Wow.
But if you complete in 7 days, you could rotate 52 times in a year. Imagine just making a 1% margin. You can have a 1% profit margin and still have an ROI of 50% if you can rotate this money 50 times in a year.
I got it. So in a year, let's say I have 10 crores. And if I'm also going to make, let's say, 1% profit on this 10 crore. But if I can rotate that money fast, meaning I can sell 100 times with that same money. Sell, make the money, buy raw material, sell, raw material, buy, sell, buy, sell.
52 times. Now, I used to tell them, who's a finance man in your company? Ridiculous to say the guy sitting in account department are the only finance guy. This clerk in the customs office is the finance guy to me. Because if he delays releasing the goods, it's bad finance management. The truck driver delivering goods across the country is a finance man. A puncture in a truck is bad finance management. We have such a narrow notion of finance management. First of all, people think accountancy is finance management.
Interesting.
Another example I give somebody, this friend of mine, let's say, hypothetical, not actual. He buys potatoes for $100. Full day he works and sells for 101 rupees. Or he buys for 1 lakh and sells for 1,01,000.
Okay.
How much profit has he made?
1%.
No, he does that every day.
Okay.
So 365%.
Right.
We think it's a 1% margin. Arre, damn it. The same 1 lakh he puts next day again.
Right.
Again he puts it.
Right.
ROI is what I'm talking about, 40, 50%.
Interesting. So, just like how a business makes mistakes, what have you observed that an individual makes mistakes, which they don't know that they're making, and they'll eventually find out in the future?
Because they don't understand enough. Many people don't even understand the negative impact of inflation on their lives. They don't even understand their investments have to be done in such a way that the money is growing faster than the rate of inflation, because they don't understand compound interest. I mean, everybody knows the word, but how many of them use it to their advantage? Because they don't understand the mechanics of stock market. And if either they don't invest, or if they invest foolishly. And I think a foolish investor is far more dangerous, because the guy never ever invests again and then go and dissuades 10, 20 other people that you don't invest. I made that mistake. So there are so many things that go wrong. So unless people understand these things, you will not be able to. I mean, there are tragic cases where you save your whole lifetime and you realize the money is not going to last you 6 months post-retirement.
Right.
Therefore, the only substitute is knowledge. Learn as much as you can about investing so that you can put your money to good use. Inculcate the habits of saving. Understand even income tax. There's a wonderful account called PPF. If you don't have, everybody I think should have a PPF account that gives you if you don't want to take any risk, if you want to be absolutely safe, but still get returns greater than FD, I think a PPF is a wonderful account. And I think people whom you are addressing, whether even you may not realize what a phenomenal service that is to mankind, because those who understand at that age will probably thank you 40 years from today.
So I still remember what my parents used to tell me, that back in their days, a fixed deposit used to give 15%, 16% interest rate. Can you talk about those days where people were getting 15% interest rate on fixed deposit? And
No, but rate of interest doesn't mean anything. If you had visited Mexico in the 80s,
right.
You would have seen the town plastered with billboards, banks advertising fixed deposit schemes offering rates of interest as high as 80%, 80.
What?
Does it sound high?
80% interest rate on
But their
fixed deposit.
inflation was 100%.
Oh.
Interest only makes sense when compared to inflation. The government has to ensure that the real rate of interest is positive. And real rate of interest means the rate of interest that you get less inflation. So when India had 12, 15% interest, the inflation was 10, 12%. So that doesn't mean anything.
Got it. But today it's a little different, right? Today FD is giving 4 to 5% post-tax returns, right? And the inflation for that same people who are in the 30% income bracket is about 10%.
So that is a negative real rate of interest, and that the government has to make sure doesn't last long. That should can happen for a short period of time, but it cannot be sustained. Otherwise, the banking system can collapse.
So you're saying right now, whatever is happening in the country cannot sustain.
Hopefully, should not happen for long, will not happen for long.
And why? What is wrong according to you right now in the country?
Because your real rate of interest is negative. The depositor in a bank will start feeling like an idiot. He says, I saved my money grew by 5%, my prices have grown by 10%, net, I'm a loser.
Correct.
The banking system can collapse.
Correct.
When India pre-1991 had a rate of inflation of about 9.5%, 10%, banks used to give 12%.
Right. Real rate of return was positive.
It has
2%.
to be.
Yeah.
A negative growth rate for about 10 years. Recessionary conditions. I had a colleague of mine who did his chartered accountancy under me, used to work for Goldman Sachs, still works for Goldman Sachs, but was posted in Japan. He was visiting Pune, and when he came to meet me, he says, now when I put money in the bank, they're leaving service charges. They were charging you money. So interest has to be seen in the context of inflation. Now, they've got two tools in their arsenal. Tool number one, monetary policy. Tool number two, fiscal policy.
Okay.
Fiscal policy controls taxes. Monetary policy controls interest rates. Now, one method is you want to reduce demand, you got to make sure the citizen has less money in their pocket to spend, so demand will go down, so they can hike up tax rates.
So that is why the government is increasing taxes.
No. They won't do that. Because if you're trying to please your vote bank, and if you hike up tax rates, your inflation will come down, but your voter will be more convinced not to vote for you. So no sensible government will use that because it hurts the vote bank. Then the next option is use the monetary policy. Then the RBI governor would be asked to, if possible, intervene. And then the RBI governor will say, okay, we have decided to hike up interest rates. Now, when you hike up interest rates, those who deposit money in the bank will earn more. Those who borrow money will pay more. So more people deposit, less people borrow. Money which was floating in the economy goes into the banking sector. When money supply in the economy comes down, inflation comes down.
No, but if the interest rates are increased,
yeah,
which is probably what the RBI will want to do to control the inflation.
If there is, yes.
Right?
But the government may not want that.
Why?
Because that makes money more expensive. Then industry starts suffering. Their growth gets stalled. So employment may suffer. So, right now, the same problem Trump is having with the Fed chief.
Okay.
He gets up and says every day, this guy is not supporting me.
Okay.
He said, I'll sack you, but he can't sack him. So that guy's steadfast in his own approach. He says, no, I will do what the economy deserves. I will not do what you want me to do. So they're on a complete war path right now.
The Fed chief is
Fed chief is equivalent to our governor. Yeah.
He's not required to listen to the president there?
No, nobody is required to.
Okay. But here...
No.
Okay.
I should not name names, but let me not name. The last 3 governors back, that gentleman refused to listen. So they did not extend his term. Then they brought another gentleman who had come from America. He listened to the government for about 3 months, and he stopped listening. So he was given marching orders, and the next guy came. So they are always on a. If the RBI governor is conscientious, there is bound to be conflict with the government.
So if this, let's say, for argument's sake, if this keeps continuing, if the inflation keeps continuing, and people's purchasing power keeps dropping, because 99% of the people in India are not good investors. They're going to do the same old thing, which is keep cash and FDs or some money in the locker. So if that keeps continuing, let's say for 5 years, 6 years, do you foresee that probably the middle class will start shrinking? More and more people will go below the income level?
It cannot continue for so long. Where will the demand come from? See, in inflation, demand is greater than supply.
Right.
For demand, you need to earn enough.
Right.
So if how will that go on happening? If the economy is not growing, that cannot. It's a cycle. It'll go up, it'll come down, it'll go up, it'll come down.
And you've seen this happen many times.
Always. Across the world.
Okay.
Not only in India, across the world.
Interesting. So maybe now we can compare us to our neighbors. Let's go to China, right? Because
I was wondering which neighbor.
Our neighbor, right? Our China. So if you go back 30 years, if you compare the GDP and the economic situation of India versus China, they were probably at similar levels, right? But fast forward to today, China is probably 3 times, 4 times much richer on a GDP per capita basis compared to an average Indian. So what exactly happened there? More, right? 5 times probably. What exactly happened over there which did not happen over here?
China grew at the rate of 11-12%
GDP growth rate.
for 25 years.
Talking about the GDP growth.
GDP growth.
11-12%.
11-12% for 25 years.
Wow.
When we started liberalizing, India's growth rate went up to 8-9%, and we kept it up for a few years. If we were able to maintain an 8% growth in GDP for as little as 20 years,
Okay.
first of all, 20 years, 8% is not little by any stretch of imagination, but I'll still use the word little. Had we done it for as little as 20 years, India would have become a developed country. We were as close to it as that.
You mean like right now it would have been
No,
developed?
I'm talking about, this started in 91.
Yeah.
We would have become some time back.
I mean, China is technically called a developed country.
But China, of course, I mean, not only developed, probably it has gone beyond that. I mean,
Super-
it looks
super
like
developed,
some science fiction.
Yeah.
So China, but then on the other hand, China can do it because it's not a democracy. They can get things done on gunpoint. They want to develop this city into a industrial hub. They can pack everybody in trucks and move the people to another village somewhere.
Oh, that happens.
Yeah. So India cannot do that. So India's growth, when you see from the lens of we are a democracy, every time you want to do something, some rights group, environmental group will come on the streets and stall it. And we take and which is the way it should be. Despite all those things, the growth that we achieve, I think is very, very commendable.
Okay. But then at the bottom line, how do we know what is better? Like, is the average Indian happier or is the average Chinese person happier?
I have no clue about the Chinese, but I think the average Indian is happier, no doubt.
You would think so?
I think so. And I think because I see very little similarity between, or very little, let's say, the money available with you and the happiness quotient seem to be at inverse relationship they have. I see a lot of poor people far happier than the guys who are richer.
Right.
Those guys are stressed out. Those are always grumpy. They're always grouchy.
Right.
So one of the reasons we are happier is maybe because we have a fair share of not very rich people.
Interesting. So if you look at let's compare China and US now, right? US was a democratic and still is a democratic country, right? And they are the major superpower of the world.
Absolutely.
Right? So, but the story of China and the story of US is very different.
Correct.
As to how they became superpowers.
Correct.
Probably if you look at US, what they did was they really favored, businesses to thrive.
Correct.
They really favored, entrepreneurs to take risks. So there's a lot of risk capital in the US. So a lot of innovation happened and a lot of, people came from around the world to live in the United States.
Correct.
How can India become something like that? Like, do you think it's possible for India to become like that?
I think we are on that path.
Okay.
Ever since we opened up our economy, we can become a melting pot like US. And now, thanks to certain policies that are happening, a reverse brain drain seems to be starting.
Right.
So the more the talent that comes here, and the more if the government continues to be responsive, it's not an impossible dream to have. It may take several years by the time we become like America.
Right.
But I think the pace at which we have grown in the last few years, in terms of changes, if that continues, that day is not far.
Maybe because you've seen that change, in front of your eyes. So, for example, someone like me, I'm 30 right now. I only understood economics probably like 7-8 years back. So, because I understood it just recently, for me to understand or appreciate the change which has happened in 6-7 years is not that significant.
Correct.
So, can you draw some examples of change that you have observed over the last 3 decades, which makes you confident about India?
I think the change started with the day we began liberalizing, and we didn't do it voluntarily. We were made to do it because we took IMF's.
Can you tell us what is liberalization? What happened?
Before 91, India was not an open economy.
Okay.
By open meaning, no foreign company could say, let's go to India and set up shop. Impossible.
Why?
We're not allowed. Forget foreign company, even if you're an Indian company. You want to start a new business, or even if you want to expand your existing business, God knows how many licenses were required. So we were living under what is known as a license Raj.
Okay.
To take you a little further back, I think in the mid-70s, we were not like that. Then George Fernandez had become the industries minister, if I'm not wrong.
For India?
For India. And he said, no, none of these. Coca-Cola used to be in India before that. They were thrown out. All multinationals were thrown out.
Okay.
Because Coca-Cola was thrown out, companies like Campa Cola and Thumbs Up were born. Otherwise, they would have never come out. Then till 1991, we were like that. You had to take a license. And it was huge amount of red tape. The result was, if you wanted to fly, you had one option, Air India. You wanted to drive a car, you had two options, Ambassador and Fiat. You wanted to invest in mutual funds, you had one option, Unit Trust of India. You want insurance, life insurance, one option, LIC. Very uncreatively, life insurance is Life Insurance Corporation of India.
So it was monopolies.
Absolute monopoly, and the result was mediocrity.
Because when there is a monopoly, there is no innovation.
No competition. There is no, like if you wanted to, I live in Pune, there's a company called Bajaj Auto. You want to buy a scooter, I'm told you had to pay a 33% booking advance for a capital goods item like a scooter, and a father used to book and son used to get delivery.
Wow.
7-8 years waiting period for a scooter.
When was this?
Till 1991.
8 years waiting period.
5, 6, 7, those days you had a NRI uncle or somebody, the biggest favor you could ask him was, can you send me a demand draft in dollars? Because if you book a scooter in dollar payment, you would get it in maybe 3-4 years rather than 8 years.
Why?
So the demand supply mismatch, no competition. Consequently, if somebody bought a scooter from Bajaj in the 60s or the mid 70s or the late 80s or the early 90s, there's hardly a change in the scooter. No innovation, no improvement. Why would you? You are the Apple of scooters. Where's the motivation?
Right.
1991, government opened up its doors.
They finally realized that this is not taking.
They didn't realize. IMF, we were in dire straits. We used to every now and then go through a balance of payment crisis. Which means if you import more than you export. You want to import, you have to pay in dollars.
Correct.
India, you want to spend, you can print rupees. But you want to import, you can't print dollars. Only America can do that.
Yeah.
So you have to export. And if your exports fall short of imports,
okay,
then how do you pay for it? Then, of course, you have to buy dollars. When you buy dollars, you sell rupees. When you sell rupees, you create a supply of rupees and a demand of dollars, and rupee becomes weaker, a dollar becomes expensive, etc., etc.
Interesting.
India used to have frequent balance of payment crisis. There were times that we didn't have enough money to import for a few days.
Wow.
1991, before Manmohan Singh became finance minister, Narasimha Rao became PM, there was a Chandrasekhar government for 10 days.
Okay.
If I'm not wrong, the finance minister was Yashwant Sinha. And India had such a shortage of forex that he pawned our gold with the Bank of England and took a loan. And I think one of the first acts of Manmohan Singh was, I don't know where he got the money from, he returned and brought our gold back. And then he did some phenomenal things which changed a lot of... I'll tell you a story. We were going through a similar balance of payment crisis earlier on in the mid-80s when Indira Gandhi was the PM. And the government had a meeting. What do we do? How do we solve this forex problem? Now, answers were also obvious. That there is a huge body of NRIs all over the world. If those guys send more money than they are sending home, all our problems can be sorted out. So why aren't they sending more money? That answer was also obvious. You take money out of the country, you bring it back. It is called repatriation. Repatriation.
Okay.
And if you take it back again, it is called expatriation. Indian laws did not permit expatriation of funds.
So once you bring the money in India, you can't take it out.
You can't take it out. So if you are, imagine you are an NRI sitting and you want to, you don't need to be a patriot to send money back home. Like you yourself pointed out, interest rates were 12, 13, 14%. Nowhere in the world you get that. It made commercial sense to park your money back home. You send your money home, most welcome. Tomorrow you say, I want it back. Government says, sorry, you can't take it back. So you would think 10 times before you send money. So government realized this is a bottleneck. They came out with a beautiful brochure, wooing NRI. Guys, come into India. All the license Raj days, we'll give you single window clearance. We'll do this, we'll do that. And we will permit expatriation. Now, this is not the time to discuss this, but one fellow who responded to this was a gentleman called Swaraj Paul, Lord Swaraj Paul, who is from the House of Lords in UK.
Okay.
Runs huge industries in India, Caparo Group, APJ Group, famous name. He came to India, but a smart guy. He didn't want to come and start industries from scratch and go through all the, those days, I don't know why I started this. This
is very interesting. Please continue.
I mean, I'll have to go backtracking to give you backstories for that. What percentage shares should a promoter hold to control a company?
Ideally, mathematically 51%.
Yeah, but otherwise, practically speaking, how much should you have? Frankly, it can go down to, one day we can do a series on case studies. You can have 10%, you can have 8%, you can have 5%.
As long as you're the majority stakeholder.
No. It's a different ballgame. He said, let's find out companies where promoters have small stakes.
Okay.
And then you go to the market and start buying the shares. And if you acquire more than this fellow's stake, it kind of becomes a hostile takeover. So one of the cases of hostile, he identified two companies. One was Escorts. The other was DCM.
Okay.
Escorts owned by the Nandas and DCM then owned by the joint family of Bharataram Charataram. And if I'm not wrong, in one of the companies, the promoters had 7% stake. And the other company, the promoters had 4% stake. So Suraj Paul came to India and told his broker, start buying these shares. Now, if you take your mind back, you are a youngster. You come into the age when there is DMAT. You have a passbook for your shares. Those days, there was no DMAT.
Right.
Physical shares. So now, if you hold shares of a company, let's say there's a company called Sharan. Let's give you a product.
1% club.
1% club limited. Okay. Right. And let's say I'm a shareholder. And I sell my shares to, I met Rachit just now, to Rachit.
Yeah.
Now 1% club's owner has changed. One of the owners has changed. You should know.
Yeah.
How will you know? You have no clue. Unless Rachit and I get together and tell you.
Interesting.
So those days, physical shares, if I sell my shares to Rachit, I used to hand over the share and a transfer form where I said, I have today sold 100 shares of 1% club to Rachit and sign it. Rachit will sign, I have bought 100 shares. Now you have my sign within your records. Why? When I bought the share, that signed a form. When this comes to you for transfer, you make sure this is a genuine transfer. You compare the signature, then you'll remove my name and put Rachit's name. Now, why will Rachit put his name with you? If he doesn't, tomorrow you declare a dividend, it will go to my house. Tomorrow you give a bonus, it will come to me. But Rachit says, last week this company gave dividend, Anil received it. This company gave a bonus also maybe last year. Track record says once in 5-6 years they give. That means there's no benefit to be gained, at least for the near future. And he says, I didn't hold it. I didn't buy the shares to hold it for long. I bought it because next week, next month, the price goes up, I'll get rid of it. Second problem those days was to send it for transfer, you had to send by snail mail.
Okay.
It would go by that mail. It would reach your secretariat department. It will take you a long time to change and then you send it back. Roughly 3 months it would take for it to come back. In that 3 months, any selling opportunity, you could not enjoy it. So Rachit says, I don't intend to hold for so long. So when I sell my shares to him, I give him a share certificate and a transfer form saying, I have sold 100 shares of this company to blank. And I say, if you want, you put your name in it.
Okay.
A little later, Rachit sells it to this guy. This guy sells it to this guy. This guy sells it to that guy. Now, by the time it reaches him, he says, now dividend is about to be declared. If I don't put my name, dividend will go to Anil. In that blank, he'll put his name and send it to me. What I'm trying to say is, your company, 10 shareholders have changed. You have no clue. Companies didn't know who their owners were.
Back in the day.
Back in the day. Swaraj Paul came to India, started buying shares. And probably, I'm guessing now, probably didn't send them for transfer. Till he collected more than 4% and more than 7% and must have made one big bundle and sent to them, transfer to my name. Those guys must have got a heart attack. Where the hell did this guy come from?
Yeah.
Such interesting, those days, such fascinating things would happen. You could track these things and write stories and stories and stories about it.
And then he came and did a hostile takeover.
No, he failed.
He failed.
Those guys went to court and court, unfortunately for him and fortunately for the promoters, said, no, this is... They forced the promoters to buy back the shares from Swaraj Paul. See, when you make a hostile attempt, the price starts rising because you're creating a demand for it.
Correct.
They poor guys were forced to buy their own shares
At a premium.
back from him at a premium and pay him some interest. So they were absolutely upset. Swaraj Paul was equally upset. What the hell? I did everything as per law. How can... So both of them were disgruntled. Swaraj Paul said, I'll never come back to India, and this and that. Came back again and again. That's a different story. But they failed. I got 2 books in my library. One written by Swaraj Paul, one by Mr. Nanda, kept next to each other. Both books have a chapter on this. Nanda talks about, we entrepreneurs with our sweat and toil build these things like brick by brick and like a dacoit, these guys come. And Swaraj Paul paints a totally different picture. Government invited us. They said, come, India needs your help. I went out of my way and they did. Very interesting.
So this is what happened when the government started liberalization. And
no, this was pre.
This was pre.
Yeah, this is pre. This is 80s.
So basically all of these things were happening. There was no innovation. There was monopolization of companies. And then India was in a big deficit when it came into dollars versus INR.
Yeah.
So they had to borrow a lot from the IMF. And then
from time to time, IMF, yes.
Then the IMF forced India to say that you have to open your
borders. The condition
borders.
was, we will give you assistance provided you make these changes.
And then they opened up the borders.
Yeah.
Then what happened?
Then India started flourishing.
So why did India not do this if it was that simple?
No clue. Maybe the
Why did it take
political
us till
leadership, maybe the quality of leadership, maybe vested interest. You feel a lot of power, right? If everybody has to come pleading to you, I need industry, and then you get opportunity to make money. I'm guessing.
Also, maybe the lobbying by these incumbent companies of India telling don't open up.
Even these companies, if they had to expand, had to take licenses. You want to... So those were different days.
So then the IMF forced India, and that's when the boom happened.
And then we did it very intelligently. It's not that we did it because IMF is saying and we're very upset. No, we went all out into it. And that time also there was a fair segment of population which recognized, yes, this is what we need. In fact, we also wanted it. You never would listen to us, but at least you listen to IMF.
Is that the time when the stock market of India started booming?
Absolutely.
And is that the time when most of us retail investors started investing in the stock market?
Still not enough invest, but yes.
Still?
I think it became a very exciting place, and the person to whom credit should be given for having brought it to the masses is Dhirubhai Ambani.
Okay, can you
He
explain
kind
why?
of brought it out from it was a closed club earlier on. A closed club of brokers and, a few people who would trade, and masses were not involved. After Dhirubhai Ambani made it glamorous,
How did he make it glamorous?
several things. Dhirubhai, the way he grew, the kind of progress, a lot of PR, a lot of people who bought his shares, made a lot of money. I mean, people have bought 100 shares of Reliance. That's it. And they built houses and married their daughters those days, etc., etc. So they swear by him. So as a result, what would happen is even the vegetable vendors, fruit sellers started applying for IPO. One day we should discuss the IPO history also, how it happened, initially how it would happen, and the instrument that banks came out with, because your money would get blocked for 3 months. Issues used to be oversubscribed 50, 100, 500, 1,000 times.
Wow.
So, I mean, imagine if 1,000 times oversubscribed, meaning one guy gets 999 people get their money back, but the money is blocked for 3 months.
For all the 1,000.
Then the instruments came out, don't have to block money, keep it in the bank. Bank will give you this document, you use that to pay, and the money will only be in cash if you get allotted. So, so much used to be. I used to write newspaper columns those days.
Okay.
I found it difficult, despite being a professional and full-time into it, difficult to keep track of the changes that were happening. Exciting changes. Each change more exciting than the other.
So my dad also told me this, that during that time, 90s and the early 2000s, even he started investing because of the euphoria.
Okay.
But then he lost a lot of money and then never touched stock market until I introduced him again.
That's a statement I made some time back. If you invest without fully understanding the repercussions, then that person is more dangerous, because not only that person never invests, then you dissuade 10, 20 others.
Right.
Which I think is dangerous. And therefore,
What happened? Did a lot of people lose money during that time?
Phases come and go. When Harshad Mehta scandal, before Harshad Mehta scandal, market was booming. When Harshad Mehta scandal happened, market crashed. So every time it crashes, some people will lose.
Right.
Every time it goes up, some people will make money. So that is a phase that will happen every time. So which is why knowledge becomes so important, that even when you lose, you should know why you lost. It should not be reserved, no, this is a bad place to be. No, it's not a bad place to be. You should expect this to happen. Sometimes it will go up, sometimes it will come down. And discerning people can take advantage of both. When it crashes, is a great time to get in. I mean, if it doesn't crash, when the hell will you buy?
Right.
I love crashes. Certain shares where you have FOMO for. Now here's the time I get them cheap again.
So back in those days, what was the hot stock? So right now we talk about AI.
ACC.
ACC. Cement.
ACC. Cement. One of the best.
Cement was hot stock. Why?
But had you bought, whatever the reason, but had you bought ACC then, the price it reached then, I don't think it will reach again in your lifetime. It touched some 15,000 or something.
Wow.
So many shares were there. I just put out a story the other day about Mazda Industries.
Yeah, you talked about, I saw your YouTube video on that. The price went from 100 to
$6 to 1,500.
$6 to 1,500. How did that happen?
Harshad Mehta started buying. Those days, Harshad Mehta would touch anything and it would go up. So,
But what exactly was he doing to make it go up? If you can explain.
no,
to the
Harshad
audience.
Mehta used to buy, demand supply, buy. The question was, where was he getting the money? That was the question. One didn't realize, those days rumors would go around that, it is film stars' black money or politicians' money or criminals' money. But then you realize the man had an unlimited supply of money available from the banking sector. He used to raise money against BR. BR is?
Bank receipt.
Bank receipt, which is equivalent to a stock certificate. I mean, in a share market, you sell shares. In a bank, you sell those securities.
Right.
But you don't give physical securities. Just as in a stock market, you buy a share, you don't get the share immediately. But the broker gives you a contract note.
Correct.
Similarly, a bank doesn't give you the security. They give you a banker's receipt on a letterhead. So he would take these banker's receipts and raise money against those, and which are sometimes bogus receipts. But how does it matter? I mean, if I bring you this phone and say, give me 10,000 rupees, I may give you a blank box. But I say, Sharan, give me 10,000 bucks or give me 1 lakh rupees. I mean, you'll examine this. Is it worth 1 lakh? But if I tell you, give me today for 1 lakh and day after tomorrow, I'll buy it back for 1 lakh and 2,000. Then how does it matter to you whether it's genuine or a bogus? So long as you trust, I'll buy it back. So he used to give those, take the money, put it into stocks, make it multiply, come and give it back to you. You make money, I make money, everybody's happy.
Interesting. So now let's come to today, the current times.
Yeah.
The Indian market as we know today. Whoever I talk to today, when I ask about the Indian market, they say it's overvalued. They say that the multiples don't make sense, the valuations don't make sense, the PE multiples don't make sense. How do I, based on your wealth of knowledge over the last 3 decades of analyzing the Indian markets, what phase of the Indian markets do you think we are in right now?
But disclaimer, not my forte. I'm not a broker. I don't consult on stock. My forte is business finance. I don't track these things because I like them. It's my font. So I'm not an economist. I'm a chartered accountant.
Right.
So these are things which I, just out of hobby, I read.
No, but I think your understanding of the subject helps you, make these kind of...
No, but I must make the disclaimer. I'm not the expert on this.
No, but the current situation remind you of some time in the past?
I think every now and then the same situation will come. These are cycles. They will happen. All you need to do is, if there's a rising phase going on, if one understands technical analysis, then when a rising phase goes on, don't start selling, because after you sell, it may go on rising. Let it continue rise. Let the fall begin. And I felt 2 dips is the time to get out. When it falls, don't start buying because falling, because after you buy, it may go on falling. Let the falling finish. When it starts rising, again, 2 jump up, because when it rises, it may fall again. So if it rises, falls, rises again. If 2 successive tops are higher than each other after a fall, is the time to get in. When it starts falling and goes up again and falls, 2 bottoms are below each other. Not a foolproof method, but a pretty good method too.
That is a very interesting note to end the conversation, Dr. Anil. I think we've gone across the board with respect to our topic. We've talked about macroeconomic.
Yes.
How was India before the 90s? How is India looking at right now? How do you invest your money? How should a business owner look at their money?
Yes.
And finally, what it really takes to be financially intelligent, right? It's not just about knowing how to invest it's not just about saving money. It's not just about, this is my income, this is my expenses, this is my savings.
Correct.
Money.
What we didn't talk much about, and let me quickly give you 2 minutes, is the book that brought us together.
Yes.
Start Early, Finish Rich.
Right.
Now, this book is aimed at kids and young adults.
Okay.
One of the reasons I wrote it is because every person I meet, my clients, I always say they are injured people. They have made the mistakes. They've suffered the consequences. Then they felt the need to come to somebody like me or anybody else to learn. And almost everybody has told me sometime or the other during their interaction with me, why wasn't I taught this in school? So I've written this book so that let's teach them young, so that they don't make these mistakes, what their parents probably made. So this book I've divided into 3-4 parts. One is general financial concepts. Second is personal finance, if you want to learn to invest. And third is, I'm assuming a fair percentage of them might want to become startup founders.
Absolutely.
So how do you start a business? Everything, I've spoken to them, I've not spoken down at them, I've spoken to them like adults. Only language used is very, very easy.
Right.
A lot of illustrations. So how do you start? What is the legal structure? How do you raise your funds if you want to start a new business?
Interesting.
Having started, how will you maintain financial statements? How do you read them? You'll have to pay taxes. So what is taxes? Etc., etc. So these are all parts of the book. So I thought, let me bring that into it.
No, absolutely. I think this is your 8th book, if I'm not wrong.
Yes. That's
right. I think you're a serial author who just keeps coming out with bestsellers one after the other. And I think you didn't bring the book today.
No, but I'm going to send it to you.
But please send it to me, a signed copy. I will definitely read it cover to cover.
Certainly.
As the same as I have read your most popular book, Romancing the Balance Sheet.
Great.
And thank you so much, sir, for coming.
Such a pleasure.
I hope you had fun.
Thoroughly enjoyed talking to you today.
Thank you so much.
Thank you.
Guys, on that note, I hope you guys have enjoyed this conversation. I hope you guys have become a little bit smarter by listening to us talk about finance, hopefully in an entertaining and an educational manner. On that note, guys, we'll see you in the next one. Before you go, guys, if this episode gave you even one insight that made you think differently about money. Don't just keep it to yourself. Share it with your friend or family member who could use it too. And if it sparked a new thought or even made you disagree with me, drop a comment below and tell me why. Your critique helps me make these conversations sharper and more useful for you. As long as you have me subscribed, I'll make sure that you walk away with at least one new thing every Wednesday.